Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex and I'm just going to go ahead and review the stock, commodity, bond, and the Forex market. So without any further delay, let's go ahead and review these key markets and talk about some key plays in motion. Alright, let's start by analyzing the bond market. First of all, bond market did have a major sell-off today. As you guys may be well aware of, bond markets do trade in the opposite direction of the stock market. Basically, they have an inverse correlation. Inverse correlation basically means that if bonds go up, stocks go down. If stocks go down, bonds go up. In the case that stocks go up, bond markets are supposed to go down. Alright, so pretty much you got the bond market in somewhat of a negative trend right now, mainly being the fact that you basically had the markets find somewhat of a support. Things coming out of Japan have stabilized for the meantime, and because of that, bond markets did have a minor sell-off. Now, if you guys want to go ahead and zoom back a bit, we did find bottom at around 116 on the Treasury bond market, and pretty much we're in a pretty wide range right now, as I'm aware of. However, I do believe the bond market will go a little lower, mainly because of the fact that stocks will continue going higher. That basically reminds me of something that I read yesterday from George Soros. It's pretty much his book called The New Paradigm for Financial Markets, and basically you guys don't want to mess with correlations. He is sort of like an arbitrage trader. Sometimes he would buy bonds and he would short stocks and stuff like that. No, he wouldn't short stocks. Yeah, he would be shorting bonds and he'd be shorting stocks at the same time, when in reality they work in inverse direction with one another. So you might have the best ideas, you might have the greatest fundamental information in the world, but generally speaking, these inverse correlations generally do hold, and I will hold you guys will hold your profits against yourselves if you guys try to go against it, generally speaking. So that being in mind, let's go ahead and review the dollar index. Dollar index pretty much finds somewhat of support at around the $75.50 area. I do believe that this is going to be a short-term support, mainly because of the fact that we do have a double bottom pattern right here from the 75.50 area. Markets kind of want to find some support around here. But overall, I wouldn't hold my breath. I do believe markets will continue going lower, at least down to $72 or something like that. Mainly because of the fact that we haven't resolved any of our fiscal issues as of yet. We haven't really submitted a new budget into Congress. A lot of things are going on right now. You still have troops in Iraq and Afghanistan. Whenever you fight wars, you run up the deficit. That causes deficit spending. That causes inflation. Inflation is caused by a money multiplier effect. And basically what happens is that money basically is constantly lent and lent and lent, or the Federal Reserve creates money out of thin air and lends it to the government. Therefore, the government spends it on war spending. Overall speaking, the only way you're ever going to find support in the dollar index, fundamentally speaking, is when permanent open market operations ends, which is most likely going to happen towards the end of this year. And you also have troops being sent back home, and I mean withdrawing all troops from the Middle East for that matter, including the end of the Libya war. So pretty much what you're going to have to see is the end of massive spending. That in turn will cause the dollar to go up, and you have to get rid of the Federal Reserve stimulus. Alright, let's move on to the next chart, which is going to be the volatility index. Volatility index continues to go lower, and I believe it will continue to go lower as we are near earnings season. Earnings season is going to happen towards the mid of April. That's where it will really start heating up. That's when your first Dow component stock is going to be reporting, which is basically Alcoa, which is a plastic company on the Dow component. Also, I do want to point out the fact that once you get into earnings season, this is about the time when stocks start to rally in anticipation of it. Does that mean that anything fundamentally has changed? Probably not, probably so. There's no real guarantee that your stock will perform very well, but people do anticipate better performance in the stock market in general. Sector rotation, people get out of the lower beta plays in order to play the higher beta plays. Higher beta basically means that the stock moves more in proportion to the S&P 500. For example, if you have a 2 beta, that means that your stock will move twice as high as or twice as fast as the S&P 500. In the case, let's say the S&P 500 falls by 5%, your stock will fall by 10%. If in the case this S&P 500 goes up by 5%, your stock will go up by 10%. So beta is a very important measure. Overall, people are going to go back into higher beta plays, and also the volatility index should continue going lower, which makes it a very attractive, very attractive opportunity. If you guys want to buy put options into it, this is the time. You will make a very decent amount of money off of it. Although the option premiums and the theta values are a bit weak on this one, there's a much higher possibility and probability of success in this type of trade. Let's move on to the next chart, which is going to be the Dow Jones Industrial Average. Dow Jones Industrial Average, I was mentioning to you guys that as long as the 12,000 level is held, we should be able to keep this market. We were able to hold above 12,000. I will pull up the 10-minute chart so you guys can know. And basically, you didn't really get much of a confirmation below. I mean, yeah, you kind of traded below, you know, this level right here, but nothing major. It was only 25 points below. Fundamentally speaking, we're still in earnings season, so this upside bias does hold. There's probably nothing going to there's probably not going to be that much of a change in the underlying stock that you're trading. Maybe the company improves their earnings a bit, but overall, people just buy stocks right now in order to cash in a profit before the news ever comes out. It's basically buying the hype, selling the news strategy, and it generally works most of the time, and that's why the markets do it. Alright, moving on, let's look at the S&P 500 depository, and pretty much this is the SPY ETF, and this is basically S&P 500 ETF. Right now you got the S&P 500 trading somewhat of a sideways pattern right now, but overall I do maintain my upside bias in the markets, and I do believe this stock market will go higher. Mark my words, we do have some resistance at around 132.50 or 133 actually, and we have more at 134.20. But overall, I do believe these levels will be retested in the near future and can be broken, because you know that just comes to show that you know even with crisis coming out of Japan, the fast recovery and the hype that can be built up into this market is real, and people are bargain hunters at this point. Everybody has this a positive outlook on the longer-term economy. It wasn't like that a couple months ago. In fact, 6 months ago, people were anticipating a double-dip recession. But nobody is talking about a double-dip recession right now. People are only talking about major corrections, issues that might come from Japan manufacturing being damaged, stuff like that, but nothing major enough to really catch the eye of major hedge funds or mutual funds for that matter, enough to change their overall market outlook at the very least. That's why markets will continue going higher. Alright, moving on, let's look at the XAG USDO, which is a foreign exchange silver spot market. Silver spot market continues going higher. It is no surprise. You do have ascending triangle pattern right here, which is very positive. That means that if this break is held for at least a couple days, you know, this break above, it kind of holds. Basically, you have a great opportunity here. Remember though that there is some risk buying in at this point, but I mean, after all, the dollar index did go up a bit today on today's trading session. As you guys can see, the one-day chart, yes, the dollar index has gone up, and silver at some point could actually pull back. You know, if you guys go ahead and look back, you know, silver could actually pull back a bit. But overall, I think there's a lot of hype and froth built into this. A lot of people are anticipating higher silver prices, a higher amount of demand coming out of China. But more importantly, people are just speculating. And remember, even in the tulip mania, you know, if you thought tulips were expensive in January, or you know maybe when they're at $100, or when tulips were the cost of I guess a wagon or a horse, who'd have known that tulips and the tulip mania could have become as expensive as a home, or even whole companies. So that just comes to show that you don't really know when the end of the hype actually occurs. You do have some candlestick patterns that might show up, and you might have some pullbacks that might indicate something or certain type of patterns. But right now, I will say that silver is still strong. A lot of portfolio managers are still buying into it, and that means that you shouldn't leave it outside of your portfolio. Moving on, let's go to Vernet X Holdings. Now, this is a company that some friend of mine referred to me and asked me my outlook on it. And I did some research into it, and I do believe these guys hold some very key patents that has to do with the 4G. They even sued Microsoft recently for some patent infringement. Basically, these guys are raking in the money because of the fact they hold on to some key technology in the tech sector. The stock is a relatively small company, maybe around 600 million market cap. I do believe this company will become valuable just because of the fact that they hold on to key technology in the tech sector. So basically, I do believe you guys are in for some great potential, great profits on this one. Maybe a call option could be done in on this one, but I would recommend that you guys do consider the risk before the reward. You do have an I think I forgot the exact name of this, but this type of triangle is extremely positive. One could only assume that this stock could go higher because it is a multi-month, multi-year triangle at this point. So this stock is definitely in for a huge bounce. I do believe $20 is more than just a possibility, but a reality. Alright, let's go on to the next chart, which is Coin Converted Organics. The ticker symbol is COIN, and the other short for VertNetX Holdings is VHC. So VHC and COIN are some names that I do want you guys to pay attention to. COIN has some great opportunity here. I do believe somebody did mention that this stock is going higher from a trusted source of mine, and I believe this stock will just go higher mainly because of the fact that people are going to buy into it. Do note that you are buying into some hype, but a lot of people are thinking that there's some great opportunity out of this company. They do believe that this stock has a chance of being, I guess, a one-bagger or something like that. Maybe the possibility of it doubling in price. But overall, if you guys want to hold on to a penny stock for, maybe a prolonged duration of time, maybe a couple weeks or something, apparently this is a play that some people out there are recommending. So anyway, just keep in mind coin and VHC. Alright, and if you guys want to go ahead and leave some comments below this video, ask me some questions, feel free to do so. And also, if you guys want to use the same charting software that I use, please follow the link below this video. Take care, and I'll have more for you in the coming weeks and months ahead.